Hello, everyone. Good afternoon, good morning, or good evening to you all, depending on where you are around the world. And welcome to the latest MEED webinar. This week, we are going to be talking about the Libya oil and gas projects market. Now, this webinar is on a topic that is a little bit different from the ones we've been doing recently, and is the reason for that really is because of what we see is the fast emerging opportunity in the Libya oil and gas market, but also we're seeing a lot of interest from our readers and users on the hydrocarbon sector in the country. This really isn't a surprise given the current situation in Eastern Europe and the increasing European demand for easy and available oil and gas supplies. So Libya offers a great opportunity and is also something that a lot of people are looking at, especially as some semblance of stability returns to the market. Now, my name is Edward James. I'm the head of content and research at MEED. And with me today, also on the call to be answering some of your questions later, is Will Crisp, MEED's Libya correspondent. Now, the format of the webinar is, as always, I'll be giving a presentation about 20-30 minutes on the oil and gas market in Libya, after which we will have a 20-30 minute Q&A session from all of you as per usual. You have in your Zoom Q&A box the possibility or the capability of asking us questions. So if you do have any questions throughout the course of this webinar, please enter them into the Q&A box and we'll do our best to answer them. Now, last webinar, we had more than 100 questions. So the earlier or the sooner you enter your question, the more likely we'll be able to answer it. So the presentation itself is being recorded as we speak, and a copy of it, if you've registered for the event individually, you will receive a copy in the PDF format of the presentation over the next 5-10 minutes or so. And because it's being recorded, it will also be available on YouTube at some point during next week. You'll get the presentation in your email, as I mentioned, and then you'll be able to also share it with your colleagues who may be interested or haven't been able to attend today. Okay, so let's kick off. Now, as usual, I just want to highlight MEED's two principal products, that is MEED.com, our news, features and analysis platform, and also MEED Projects, which is our database of all major projects in the region, Middle East and Africa. And it's from these two products, the information we gather on a daily basis, that we are able to quantify what's happening, understand the trends, and be able to highlight to you some of those opportunities. Since I have you all with us today, I'd also like to just highlight that our MEED Projects Awards is coming up later this year. And if you have recently completed a project that you're very proud of, then we would be more than happy for you to submit your nomination and entry to our awards. As you can see here on the screen, we have many different categories and nominations. So if you do have a project recently completed in the last year or so, then please contact us, get the entry forms and submit those, and to be in for the reckoning for the National Project of the Year within a specific country, and also overall regional project of the year within each category. Again, if you want to find out more, there's an email address below for you to email. You can also just scan with your phone camera here the QR code, and that will also give you more information. And then finally, before we start the presentation proper, this is just to remind you that there is an associated premium report with this webinar. It's called Libya Oil Gas 2023. There is a special pre-launch discount of $500 off the normal price of just $3,500. You can also get an additional $100 discount by applying this webinar code that you can see here. The pre-launch offer is available to the 14th of May. If you want to find out more, you can again scan this QR code for more details. But this report, a very long, extensive report in PowerPoint format, essentially goes through the opportunities, strategies, investments and challenges in the Libyan oil and gas market, and is essentially an extension of the slides and the report that you see today. So again, if you want to know more, please scan this QR code to access the table of contents and some sample pages. Okay, so let's kick off proper with the webinar on the Libya oil and gas market. As ever, you'll be receiving this presentation in PDF format in about the next 5 or 10 minutes. So you'll be able to look at it in your own time. The presentation is also being recorded so that you'll be able to view it next week or so on YouTube if there is anything that you've missed. Okay, let's start off though with a poll question. Poll question 1, which will appear now. The question being, is your company actively targeting the Libya oil and gas market? If you could just answer yes or no, and then we'll see the results. It's anonymous, so don't worry, your name won't appear. And it'll be interesting to see just how many companies of us attending today are actively looking at the market. All right, so let's see the response. Okay, I don't know, you should be able to see that, but of the 114 people who have responded, it's a good sample size, 84 or 74%, 3/4 of you, are actively looking or targeting the Libya oil and gas market, and 1/4 of you, 26% or 30 out of 114, are not. So the majority of you on here today are actually looking quite right now at the market, which is very encouraging. Okay, so let's quickly go through the basics of the Libya oil and gas projects market. Now, Libya actually has the largest oil reserves in all of continental Africa and about 3% of the global total. That is somewhat of an underestimate because huge portions of the country have not really been explored or defined in terms of their proven reserves. So that the figure is actually likely to be a lot higher than that, again, which is one of the reasons why the Libya market is so interesting. Now, the country is also highly dependent on oil and gas reserves. I think about 98% of government revenues are dependent on oil sales. So it really is the most critical market or sector in the Libya economy. As you'll see here, there's about 48 billion barrels of reserves and approximately 53.1 trillion cubic feet of gas. So they're a very interesting market indeed, especially when you take into account its close proximity to Europe. Now, as we know, the market, particularly over the last 20 years, has failed to live up to expectations. There's a potential for a total production capacity of about 1.6 million barrels a day, although current output is considerably lower than that and has been lower even still over the last 10 years due to the civil war and other conflicts since the end of the rule of Gaddafi some 10, 12 years ago. Likewise, years of sanctions and conflict have also impacted downstream refining capacity. We have in total about 630,000 barrels a day from 8 refineries, downstream assets along the coast in the country. However, the actual processing capacity from them, again, is considerably lower. In 2021, Libya made about $27 billion from petroleum exports, which is almost all of the country's government revenue. So again, it's very, very critical indeed. And as you see here, on this map, the bulk of hydrocarbons come from just a handful of basins. So 93% of the country's total quantity is on the onshore Sirte Basin here, and the Merzuk Basin here in the southwest. With the exception of one or two notable projects, almost all production of oil and gas in Libya is onshore. And as you'll see here, most of it is at some distance from the coast for export. And that means there are many export pipelines running from the interior desert field locations to the coast for export. There is some offshore gas production from the Bori field, but as I said, most of it comes from onshore. So just putting into perspective, as we talked about, 48 billion barrels of oil proven in Libya, which again is an underestimate. You can see how that compares with other countries worldwide. It's higher than Qatar. It's much higher than Algeria, higher than Nigeria. So it's as I said, the largest in Africa. And given that this is quite a considerable underestimate, it really is vying with some of those other markets in terms of total oil reserves. In gas, it's a little bit lower, again, with the caveat that a lot of it has yet to be proven. There's a lot of the countries unexplored, but you can see it ranks number 20 in terms of gas reserves. And the other interesting thing about Libya is that unlike other markets, the fact that it has been performing under expectations and total output in the last 20, 30 years means that there is still plenty of easy oil, light crude oil, sweet crude oil, in Libya, which is much lower cost to produce than some of the other markets which are now using enhanced oil recovery techniques. So in terms of oil output, just a recent history over the last 20 years. As we know, the sanctions were imposed in Libya or on Libya since the mid-80s. And the result of the sanctions were that the government or the National Oil Corporation, NOC, was unable to import the necessary equipment and technology to modernize and upgrade its facilities as they aged. So until 2002, 2003, oil output was lagging between about 1 million and 1.4 million barrels a day. That it compares very badly with a peak production of about 3.3 million barrels a day in the mid-1970s. So that just puts into context or proportion just exactly how much potential Libya has. In the past, it has reached double the current figures. So that again gives you an idea of the potential for the market. Now, in late 2003, sanctions were lifted on Libya, and there was a big expectation that there would be a huge amount of foreign investment to upgrade and explore and produce from new fields. And indeed, in the 5, 6, 7 years following, we did see an uplift in the oil output, reaching from about 1.2 million barrels a day in 2002 to about 1.7 million barrels a day up to 2006, 2007. Then, unfortunately, as we all know, there was the overthrow of Gaddafi and then the start of a decade of conflict and civil war in the country. You can see here very considerable and sharp dip in output as fields closed, IOCs left the country, facilities were taken over and mothballed or damaged and destroyed. And it took a couple of years for the output to rise again before again conflict and other challenges saw production slump. Again, we saw a blockade imposed in 2020, which saw again output fall to less than 400,000 barrels a day. But in the last 2 years, we've seen a bit of a return to normality. There are, of course, still tensions and still issues at hand, but with recent times, we've seen oil reach 1.2 million barrels a day or so. So difficult, challenging period for the Libya hydrocarbons market for the last 20 or 30 years or so. Now, if you remember, we spoke earlier about the majority of oil and gas output being from the two basins at Merzuk and also at the Sirte Basin. And as you see here, the oil and gas output and the fields here are primarily split down the middle between the west and the east. And you can see here in the Sirte Basin, we have a large number of oil and gas fields. And as I mentioned earlier, all of them in the interior need quite extensive export pipeline networks to the coast, where there are some refining facilities, export facilities, and even an LNG facility. We've got El Cida, Ras Lanuf, Soitina, Tobruk, Al Zawiya, as well, where the downstream facilities are and where the export facilities are. You'll also notice there is the Green Stream pipeline, the gas pipeline from the Wafa field going through Melita onto Sicily, which is the Libya's main gas export pipeline and its main source of gas exports. On the western side, you can see we've got a combination of oil and gas fields, largest of which is the Elephant El Feel field, operated by Eni. And then we also have a number of other substantial fields like Sharan and Wafa. But you can see here a good spread geographically of the major oil and gas fields. Now, talking earlier about large portions of Libya not being fully explored or appraised, and there is large, vast areas of the country where there is a good potential for oil and gas output. And that is something over the next 20, 30 years, which if there is a return to long-term stability, expect this to be something that would be of great interest. Now, we saw in the previous two slides a big issue or dips in oil output, and it's fair to say that Libya has in the past and still currently to some degree has a number of geopolitical and economic challenges. Thanks to a combination of sanctions and the conflict, the infrastructure in Libya, in oil and gas infrastructure, is in most cases very old. There is aging infrastructure. There is the lack of funds for modernization of these facilities. These refineries desperately need foreign technology and new equipment to be able to go back to their design and nameplate capacity levels, as do many of the upstream oil and gas fields. As we know, there is still a big political rivalry in the country between the east and the west, out of Tripoli and Benghazi, with different competing claims of sovereignty from different areas, and that clearly doesn't help the oil and gas market. Likewise, the uncertainty in the market and the political situation means it's difficult to attract investment, but also to make investment in the oil and gas sector. For example, some of the operating companies, it's difficult for them to increase output or make an investment in output if a separate NOC subsidiary is operating a downstream asset which is not able to process or is inoperative to process the enhanced production. Likewise, there is still a degree of gas flaring in Libya. It's still very much focused on thermal power production, and with the focus nowadays on renewable energy and green or blue hydrogen, Libya is some way behind in this respect and still needs to make huge investments in order to become a more greener and more sustainable oil and gas market. Going back to the political situation, it's still true that many of the operating companies have political appointments where politics can sometimes intrude on oil and gas decision-making and investment decision-making, which can delay projects. And of course, delays or lack of investment are some of the crucial aspects of the market. Now, the oil and gas sector comes under the umbrella of the centralized National Oil Corporation, a part of the government, part of the Ministry of Oil, which effectively runs the oil upstream, midstream, and downstream oil and gas market in Libya. As you'll see here, National Oil Corporation is split into a number of joint ventures, which I'll show here, and fully owned, 100% owned companies, each of those operating different oil and gas fields or downstream assets. So here you can see the NOC different fully owned subsidiaries like Zalaf Oil and Gas, Cert Oil, Arabian Gulf Oil, Ras Lanuf Oil and Gas Processing, and so on. It then has a number of joint ventures like Zuatina Oil or Melita Oil and Gas, Waha Oil, which it has in joint venture with various international oil companies. Each of those in turn operate different fields. So you can see here the Waha Oil Company, which is a joint venture between National Oil Corporation and ConocoPhillips Marathon Hess, operates these fields, Waha, Samat, Dahra, and Jallo. Mabruk, a JV between NOC and Total, operates the Mabruk field, and so on. So either fields are operated by NOC alone through its 100% owned JVs like Serta Oil and Ajoko here, the Brega and Nasa fields, or it operates through a JV and of itself and other IOCs. In terms of the key figures and decision makers in the oil and gas sector in Libya, I want to focus on two. The first is Mohamed Aoun, who's the Minister of Oil and Gas in the country, and then Farhat Omar Ben Gdara, who is the Chairman and CEO of the National Oil Corporation, the NOC. Here's a bit of a biography about them, but these, especially Farhat, are the key decision makers and the key movers in the hydrocarbon sector in the country. Now, under NOC, as I pointed out, are the various different operating companies, and the CEOs and chairmen and the key executives at those individual JVs or the 100% owned subsidiaries of NOC also have a fair degree of autonomy and decision-making power. Just a reminder again that you should be receiving this presentation as we speak in your inbox, and there's an opportunity as well to ask questions in the Q&A session after this presentation. So please take the chance, an opportunity to submit your questions in the Q&A box in the Zoom menu bar. Okay, now let's take a look at the projects market in specifically and what's been happening in the market over the last 20 years. And the answer, as you'll see from this graph, is not a lot. So as we mentioned, after the lifting of sanctions in the end of 2003, there was a big expectation that would be a big rush of foreign investment and a big round of spending by NOC and its subsidiaries in the oil and gas market in Libya. You'll see here that there was some spending, about $4.5 billion worth of spending over that 5-year period, but not nearly as much as was initially expected. Then in the next 5-year period, that number actually fell to about $2.5 billion, again, way under what was expected. And this was during a time of stability when Libya was trying to attract foreign investment for various reasons, contractual, political. It was unable to really proceed with a lot of its project plans. And don't forget, of course, this period was the time of very fast rising oil prices. There was a big surplus in the market. It was just that the country wasn't able to translate this surplus into hydrocarbons projects. Then, of course, from 2011 onwards, we entered a decade of conflict. You'll see here that spending over the last 10 years has really been very minimal, not that surprising. And the question mark is now, with some stability returning, with a focus on increasing oil and gas output, with global demand for gas in particular rising fast, what is the future for the oil and gas market? Can it suddenly grow from this rather weak performance over the last 10, 20 years? So it's been a bit of a difficult time, as you can see here, and reason really why many companies have removed Libya from their target list over the last few years. But there's also a reason why many of them are now looking at it again. You'll see from this, yes, there hasn't been a lot of spending, but it also implies that there is a huge demand for new capital investment in the country, whether it's sanctions related or politically related. many of the facilities are working well under capacity in the country, need massive investment. There is a huge need to explore and produce new output, build new pipelines for export, and really it's been a market without investment in the last 30, 40 years, and it represents a fantastic new opportunity for companies. Now, in terms of known defined projects in bidding or coming up in Libya, we can see here that there's approximately $5 billion of projects in pre-qualification stage in the oil and gas market, and a further $1 billion either under evaluation or in tender, main contract bid. Beyond that, there is also a $1.4 billion of known projects in the FEED or study stage. This figure that we can see of about $7 billion projects is split nearly 50-50 between gas and oil sector. 3.3 billion is in upstream, 2.9 billion midstream, and about $600 million in downstream projects and storage projects, respectively. Now, this figure might not seem a lot when you compare it with other markets, but it is important to note that this is just the beginning. Almost every operator in Libya requires billions of dollars of investment. We'll be talking later about the targets and objectives from NSC and the government. And it's clear that this is just the beginning and that there will be tens of billions of dollars of investment required in the market should the situation and conditions allow. So I'm just going to highlight a couple of them for you. I'm not giving all of them, but just because we haven't got time. But here's some of the key projects either under pre-qualification or bid. As you'll see, they come from a variety of different operating companies. Perhaps the main one here currently is the Libya Oil Gas, the JV between NOC and Eni, and its offshore Bori field development and expansion and enhancement of the Melita onshore complex. We also have the Tobruk oil terminal upgrade from Brega Petroleum Marketing. We've got forward water injection and Zenad station from Harouj. We've got export pipeline from Nafora to Zretina from Ajoko, Arabian Gulf Oil Company. Zalaf Oil and Gas, which recently awarded a $500 million refinery technology contract in the south to Honeywell. It has planning a number of field developments and export pipelines. We've got Mabruk planning pre-qualifying for an early production facility EPF project, the Mabruk field, and so on. Now, yes, projects take time to tender and be awarded in Libya, but we've got a more optimistic pipeline and short-term list of projects than we have ever had in the last 20 years. So that, again, is causing a room for optimism and indeed why the number of companies targeting Libya is increasing. At the same time, we have a number of new field developments being planned. Waha Oil Company, just to name one, has the NC98 gas field development and the North Jallo oil field development planned and should go to market over the next 18 months or so. Even more imminent is the Chadar, Akshan, and Eroin field developments in the south planned by Zalaf Oil and Gas. Zalaf, of course, perhaps being the most active oil and gas client at the moment in Libya, alongside Melita Oil and Gas. So there are certainly plans. If you look at each of the subsidiary companies under NOC, they're all talking about longer term plans now to restart production, to expand production, to modernize facilities. And I firmly believe now that should this political situation remain stable, that we are on the verge of a major investment program over the next decade in Libya, especially when you consider the strong demand potentially for Libya oil and gas. And it's really the critical stage, I think, for companies to be first movers to go into Libya and take advantage of this situation. Okay, so let's move on to the second question. Having listened to what we just said, or what I've just said, do you think Libya can recover to become a strong oil and gas market and live up to its potential? Yes or no? And we'll see what 200 of us say. So just give you a couple of seconds to answer that. Okay, let's see the response. Okay, so almost identical as the previous question. Do you think Libya can recover to become a strong oil and gas market? Well, 97 of 127 of you say yes, i.e. 3/4 of you say yes, while 24% or a quarter of you, 30 out of 127 say no. So the majority of you, from a good sample size of 127 respondents, say yes, it can recover and become a strong oil and gas market opportunity. Very interesting indeed. Right, let's carry on now. Okay, so what I'm going to do here is just touch on one of the key subsidiaries currently operating in Libya. This is the Melita Oil and Gas company, which is a subsidiary of NOC in joint venture with Eni. And the reason I've chosen to look at this company is because of the a major project offshore that is planning the Bori gas field development. All right, so Melita Oil and Gas is one of the largest, if not the largest, oil and gas companies operating in Western Libya. It has about capacity of about 600,000 barrels of oil equivalent of crude oil and natural gas. Now, of course, not all of that is being produced right now for the reasons we've outlined plenty of times already in this report. And Melita has operates a offshore platform a few dozen kilometers off the coast of Libya, where the gas is produced and then sent by pipeline to Melita onshore complex, where it's processed before being exported via the 516 kilometer long Greenstream pipeline to Italy, where a large chunk of Italian gas demand is met from Libya. And of course, Eni, being one of the state-owned oil companies of Italy, is naturally involved in the Melita project. Now, Eni, or the Melita, also is involved in the Western Libyan gas project, the Wafa and El Feel projects in the south. These are also producing fields, and the oil from those is again exported to the Melita complex for processing and export. I won't go through all the details, so you can see them here. So here's an illustration. As I mentioned, you've got onshore, you've got in hundreds of kilometers away, because this is not to scale, this map, you've got the Wafa production plant, where you can see there is a 32-inch gas pipeline, 440 kilometers long. One of the aspects of the Libya oil and gas market is the fact, as I mentioned earlier, that the oil and gas production facilities are very much inland, long way from the export routes, and therefore there has to be lengthy, long pipelines between those facilities and the export facilities. And indeed, one of the challenges of recent years has been the militias or the armed combatants being able to shut down output, as it's extremely difficult to secure and keep safe these very long distance pipelines. There is also a 32-inch gas pipeline, and this all meets up in the Melita complex. Offshore, there is the Bar Salam field, the Sabrata platform, as well as various subsea clusters. You can see the gas produced is exported 110 kilometers to Melita, as well as condensate production. And from there, the gas is exported to Italy on the Greenstream pipeline, where it arrives in Gela in Sicily. Okay, so one of those elements I mentioned is the Wafa oil field. It's about 540 kilometers southwest of Tripoli. It's near the Algerian borders. It's been developed it's been producing for many years, since 1964, and it currently has a production capacity of about 37,000 barrels of oil and condensate and 22,000 barrels of NGL from 51 wells. And then it's exported, as I mentioned earlier, via pipeline, the products that it produces to Melita on the coast. Offshore, we have the Sabrata platform and the Bahr Salem offshore gas field. It's Libya's main offshore producing field. The gas produced is exported back to the mainland at Melita via a 36-inch, 100-kilometer pipeline. And from there, it is then processed and exported via the Greenstream pipeline to Italy. I won't linger on these details. Now, what's happening at the moment? Why are we talking about Mellitah Oil and Gas? We're talking about Mellitah because it has perhaps Libya's biggest current project, which is further development of the Bahr al-Salam, which means Bahr means sea, Salam means peace. So Sea of Peace field project offshore. And the objective of this is to increase gas output through the construction of a couple of new structures or platforms called A&E structures, and then to increase the gas export pipeline capacity to Mellitah to expand and enhance gas processing capacity at Mellitah onshore itself before exporting the gas. Now, this is a project that has been planned or in the pipeline for 2 or 3 years now. Pre-qualification for this project started 18 months ago. It's going to require an investment of about $8 to $9 billion, according to Eni. And the tender process for the various 4 or 5 main packages on this is now underway. There is, of course, an urgency for this project with the Russian invasion of Ukraine and the gas crunch in Europe. Both Algeria and Libya, as well as Egypt, are well positioned to be able to meet some of this increasing gas demand. And of course, it makes so much sense. You can either export directly via subsea pipeline or quick shipping voyage or journey to Europe. So it makes a lot of sense for a lot of Europe's new gas demand to move from Russia to the North African states. So hopefully we'll start seeing contract awards on the Bahr Salam Buri field development over the next few months. Now, just in terms of other smaller non-EPC projects, while the focus is often on these sort of big ticket EPC deals, each of the JVs of international oil companies and NOC subsidiaries, as well as NOC's fully operating subsidiaries, are constantly tendering a large number of smaller tenders. So whether that's the supply of valves, whether it's the provision of tugs, whether it's pipeline protective paints, whether it's new airfields, or whether it's something like certification or insurance, as we can see here, there was a constant stream of tenders. At any one time, you would have several dozen tenders issued by each of the operating subsidiaries. Yes, not all of them are big ticket EPC contracts, as I said, but there is still quite a large number of different interesting tenders coming out from the market. These are just 5, 6 examples recently from Mellitah, and I guess giving you some of the examples of them. Our report contains dozens more, as well, of course, as a complete overview of the projects from each of the different oil and gas companies. Now, in terms of registering and tendering for these oil and gas companies, well, most of them are quite transparent in how, at least in terms of how to register with them, how to pre-qualify. As you might imagine, there isn't always a huge number of companies pre-qualified or registered with these companies. So they're always looking out for new companies to participate in their projects and tenders. And this is just an example for Mellitah Oil and Gas, how to pre-qualify as a vendor, a supplier or contractor or consultant, and how to automatically receive tenders from them. And then again, throughout the report, we are providing details and LinkedIn links to each of the key decision makers and key personnel at all of the various oil and gas operating companies, some of whom you can see here at Mellitah Oil and Gas. So just a reminder that, again, this webinar is part of the Libya Oil and Gas Premium Report. We've seen about 20 slides here today. This report has, I think, more than 170 slides giving a full overview of the challenges, opportunities and structure of the Libya oil and gas market. If you are interested in oil and gas projects in Libya, it is a must read. It provides a complete overview of the market and will give you lots of opportunities and ideas to help you build your strategy and enter or expand into the market. If you want to know more, please take a photo of this QR code to be able to download some sample pages and the table of contents. Right, we're going to go to the Q&A now, and my colleague Will Crisp. But before we do so, one final question, if I may ask you, and then we'll move on to the Q&A. So this question is, would you be interested in the MEED team contacting you about not just the report, but also other MEED products and solutions like our projects tracking database or our news features and analysis service, meed.com? If so, just type in, click yes. If not, just click in no. And once that's done, we'll move on to the Q&A session. Okay, so I'm very happy to have with me today Will Crisp, who is MEED's Libya correspondent covering the oil and gas sector in Libya. He is extremely experienced journalist and has been looking at the North Africa market for several years now and has written many exclusive stories and updates on the projects market in the country. Hello, Will. How are you?
Yeah, not bad. Good to join you.
Thanks very much, Will. So just a reminder before I have some questions for you, Will, but just as a reminder beforehand, if you do have any questions for us, please put your question, insert your question into the question and answer box. It is anonymous, and we will attempt to answer your question during the Q&A session now. Will, before we answer questions from our audience today, I have a few questions for you myself. So we've been looking at the market. What is, if I may start off, just what is the government's or NOC's objectives and targets for Libya? We see something about, we've heard something like 2 million barrels a day, up from 1.2, 1.3 million barrels a day now. Can you just expand on that, what those targets and objectives are, and also what opportunities are going to emerge as a result?
So, yeah, I mean, we talked briefly about, you outlined the activities that we've seen in Libya historically regarding gas and oil, and definitely when we look at in the past, it's been almost all about oil, even though there is that existing gas infrastructure. And right now, I met actually with the NOC board member Khalifa Abdul Sadek at the beginning of March, and he really did emphasize that right now the oil targets remain the #1 priority. Officially, NOC is targeting 2 million barrels of oil a day within 3 to 5 years. And broadly speaking, this is where we're seeing a lot of the small and medium-sized tenders that have been coming up over the last couple of years. And we're expecting that trend to continue in the short to medium term.
So the NOC objective is to move from about 1.2 million barrels of oil production currently to 2 million barrels a day over the next 3 to 5 years. So what needs to be done in order to achieve that? Are there any particular projects where they expect to see that additional output to come from?
So it is interesting to think of what they need to do. I think a lot of what we're going to see is upgrade projects, overhauls. We're looking at a country which has got oil infrastructure that has seen persistent underinvestment for an extremely long time. There's a lot of equipment which is aged, and Libya does have a very skilled oil and gas workforce, and they've managed to do things that maybe some other countries wouldn't be able to do with what's available to them, but it does need investment. It does need new processing plants and things like that. So that's going to be one of the big challenges when we're talking about boosting to 2 million barrels a day, because it's not just underinvestment and maintenance issues, it's war damage as well. And there's been fighting as recently as 2020. So a lot of upgrades, a lot of repairs. And when you talk to a lot of analysts, there's a lot of doubt about whether Libya can actually fulfill this target of producing 2 million barrels a day within 3 or even 5 years. So it remains to be seen. But even though there are a lot of pessimistic analysts out there, I think Libya has long been a wild card in oil production. Of course, I was in Libya during the civil war, and we saw extensive damage to infrastructure and things like that. And as you highlighted, at that time, officials were saying, once this war's over, we're going to be back to pre-war levels within a matter of months and things like that. And as you highlighted near the beginning of your presentation, they defied the predictions of analysts and doubters, and they did manage to get oil production back up to 1.6 million barrels a day in the aftermath of the war. So Libya is a wild card, and it really can surprise analysts. And I think it's whether we are going to see 2 million barrels a day within the next 3 to 5 years. It remains to be seen, but I think it's definitely possible, especially with so much engagement from the international community right now.
Well, certainly be that 2 million barrels a day will, of course, be something that Libya hasn't seen for 30, 40 years. So it will be very interesting indeed to see whether it will reach that target. Clearly, we're going to require billions of dollars in investment in upgrading existing infrastructure, but also in new production as well. You mentioned briefly before gas. Now, Libya is 20th in the world in terms of gas reserves. It's more famous for its oil output, but clearly the current situation in Europe, it offers a fantastic opportunity for new gas exports to Europe. Where do you see that going? What kind of potential is there for gas?
I think there's extremely significant potential for gas projects in Libya right now. At the end of April, the NOC board member that I met, he went on to meet with members of the Libyan Business Council, Abdel Sarek. At this meeting, he went on to emphasize again that oil production target remained the country's #1 priority in the short term, but he also really pressed home the fact that Libya wants to dramatically ramp up gas production. He also said that further down the line, he wants to see more investment in renewable power infrastructure, but we're not really expecting the renewable project expansion to get going for quite a few years. But when we're talking about the gas, I think we're seeing the investment now, and there's demand in Europe. There's reserves in Libya, and I think we've already got some good infrastructure in place that can be built on. So and the geographical positioning is optimal. So there's a very good prospect for large gas products. Large gas projects that can potentially provide significant volumes to Europe coming up in the future.
And of course, perhaps the most imminent of those is the one we were talking about earlier, the Melita Oil and Gas Bori Field Development Project. What do you think is going to happen next on that? Do you think it's going to proceed very soon? And do you think we'll see rapid progress on that? It's a huge investment requirement. Do you think an NOC will go ahead with it?
I think, the significance of this project can't be overstated in terms of Libya's gas production. We're talking about a project that's got a production capacity of 750 million cubic feet of gas per day. So when we think about the current Libyan production, that's 50% of the current Libyan production. So it really could potentially transform Libya's gas sector. We could see all kinds of different projects coming up from this. The Green Stream pipeline, which you mentioned, it's a key piece of infrastructure, and it's connected directly to the onshore Melita complex. Currently, when I was talking to the NOC earlier this year, they told me that it's only operating at 30% of its current capacity. So they can potentially, put all of that additional gas straight into the pipeline and start exporting to Europe. So it makes a lot of sense to Libya, and it makes a lot of sense to European governments, which are really hungry for that gas. So I think when you see the kind of the goodwill and very motivated international partners in Italy and in Spain, and you also see motivation from NOC and levels of engagement, what we're seeing in general with NOC right now, as well as specifically with this project, is that the internal mechanisms seem to be working quite well at the moment. They seem to be working efficiently. We're seeing very positive interactions with European businesses, and we're seeing tenders coming up regularly. So it's built a lot of confidence that this project can make progress over this year.
Thank you. Thank you very much, Will. And I'll come back to you in a sec with some questions for you, which have been posed by the audience today. We've got some 20 questions already. So let me start off with the first one. Are there any plans on having jetty or port constructions on the coast in Libya in order to, I assume, to boost or assist with oil and gas exports by ship? I'll take a stab at answering this one. I think the focus primarily is repairing or upgrading existing facilities, because Libya does have half a dozen major export hubs along the coast, all the way from Tobruk and the east to Al Zawiya in the west, and having already the export pipelines to those facilities, the focus I think is very much on developing those or improving those. So whether it's breakwaters, new quay walls, whether it's repair facilities, small scale expansions, and so on. I think that's going to be the focus rather than any new greenfield ports or jetty construction in other locations. I could be wrong, but as far as I know, that is the current focus, and will correct me if I'm wrong there.
No, I think that's exactly correct. And that's what we've seen. It's a trend that we've seen for quite some time now. We've seen a consistent number of oil terminal projects, but it is mainly in the upgrade area. I think, if you check Libyan tender boards right now, there are existing port upgrade contracts being tendered there. You can bid on them right now. I think there's one at Melita, actually, for upgrade to a tugboat terminal. So, the shipping routes and things like this are a priority. That's something they want to maintain and something they want to keep going.
Mm-hmm. Okay, another question here about payments. So there is an issue, someone is complaining about payment issues and taking up to a year to receive payments. Now, this is not an issue necessarily isolated to Libya. Many of the oil and gas markets in the region do have issues with payments. Indeed, across all project sectors, getting on timely payments can be difficult, and Libya is no exception. And it's true that companies wishing to operate in Libya do have to take into account that it may be difficult, or there might be a lot of red tape as well, to receive payments. And it's something that I think companies have to accommodate. And there's another question about the payment duration. And again, you're not going to get paid in 30, 60, or probably 90 days in Libya. It's going to take longer than that. And I think this is certainly something companies do need to take into account when they are looking at the market. It isn't the easiest market to operate in. However, the rewards can be big if you stick at it. Got a question here about who are the main EPC contractors in Libya, especially for pipelines. Now, as we saw from an earlier graph, there hasn't been a huge amount of large EPC work awarded in the last decade. So it's difficult to pinpoint some dominant contractors. However, I would say that historically speaking, Bonatti from Italy is a major pipeline player in Libya. Of course, other Italian contractors like Saipem for example, is another major contractor in the country, as are French and Spanish and Greek firms. So it's tended to be dominated by contractors from those countries. However, as we have seen recently, for example, with Honeywell, a US company coming in on the refinery, there is opportunities for all. Okay, what is your expectation for the next year in terms of production and project spends? What is the terms? What do you expect next year for increases in production and capital expenditure? Will, perhaps I can pass that one to you.
Well, as I said before, Libya really has got a reputation. I mean, it's got a track record of being an absolute wild card when it comes to production. There's been times such as after the war when you thought that it would take literally years for production to recover, and it recovered, by hundreds of thousands of barrels of oil a day in a matter of months. And then there's other times when you thought that everything was perfect and production would increase dramatically, and we saw the political situation actually shut down oil terminals and things like that. What we've seen recently is 1.2 million barrels a day, relatively consistently for a matter of months, and I think with the caveat that this is a market that's quite difficult to predict. I think for some time it's likely that we'll continue at a similar level if the political situation stays the same.
Okay, so we're not expecting a massive ramp up over the next 12 months or so.
I don't think so. I think that the 1.6 level that we saw after the war was achievable because since then we've seen increased damage on infrastructure from war. We've seen the infrastructure aging and things like that, and that's really the things that are kind of creating bottlenecks and stopping production. So I think until we see serious efforts to push through these projects, which I know the NOC is taking extremely seriously, and I really think it's possible that those kind of projects will be executed soon. But until that happens, I'm not really expecting a big ramp up in production.
And of course, the big short-term projects are the Bori field development for Libya Oil and Gas, and then the South Refinery and the Eroin, Chadar, and Abshan field developments. Do you think that we might see those being awarded over the next 12, 18 months?
I think due to the level of engagement we're seeing from Libya's National Oil Corporation with companies like Honeywell and things like that, I'm feeling. I think it's reasonable to feel optimistic about these projects making progress over the next year, 18 months. When I met with Abdel Sadek, he couldn't press hard enough just how open Libya is for business. He kept repeating it, and I know that they've also meeting with companies. They're making tailor-made project financing arrangements and things like that. And adding to this, we are seeing contracts signed. We are seeing Honeywell entering the market. If these companies have done, their due diligence and things like that, and they obviously have belief that things can change and projects can move forwards. And so I think there's good reason to expect those projects to make progress over coming months.
And leads me to the next question, really, which someone has asked, which is about security and banking guarantees, letters of credit, and export finance guarantees, and so on. So how can companies which are interested in entering the market, how can they be secure or feel confident about their investments?
I think
to get the guarantees.
You highlighted that Libya was under sanctions for many years, and it's faced a whole range of challenges across all industries, and the financial industry included, and it has developed an idiosyncratic type of banking infrastructure and set ways of doing things, which can take time for outside companies to get used to. But at the same time, so I don't think it's going to be extremely simple. But at the same time, we've got the NOC and the central bank that are both making significant efforts right now to engage and help companies find financing. That they've really prioritized key strategic infrastructure projects. And if you're participating in something like that, it seems clear to me that they're going to make your life easy if you're looking for finance to make a project happen.
Okay. Thank you. Quick question here, and perhaps you can answer quickly. Is there any plan for oil and gas export pipelines to the south of Libya, to continental Africa, rather than to Europe, as we've been talking about oil and gas exports to Europe? Is there any plans to build pipelines going down to Chad, Niger, Sudan, and so on?
As far as I'm aware, there's nothing like that I'm aware of, or when I'm in the market and I'm talking to people. Recently, no one's talked to me about something like that. But I think since the war in Ukraine, we've seen just a string of European officials visiting Tripoli, talking to NOC, talking to the government, and Europe really is the focus right now for Libya. They see that this is a market hungry for energy, that wants to diversify its imports, and there's talk of a second gas pipeline. That's one thing that we're hearing, even though right now the first gas pipeline is only a third full. So yes, it is Europe that's the target. I think they're not looking to send exports.
Okay, got another question here, or a bunch of questions really, about the current political situation, general security of the oil and gas industry, and how you think it's going to pan out. Obviously, we do have this split in the country between East and West in terms of governance. Can you just sum up the current situation and your view on how it's going to pan out over the short and medium term?
The dynamics very tricky. We've obviously a very fragmented country, but I think two key things when we're looking at the positives. When I met with Khalifa Abdel Saleh, he impressed upon me that the National Oil Corporation remains independent from these two governments which are struggling for control of the country. The central bank and the National Oil Corporation remain independent, and they have proved in the past that they can operate. They can do deals, they can make projects work, they can do things without what we'd see as a kind of normal government in place and things like that. So yes, is the country extremely politically fragile, and the security situation full of uncertainty? I think it's true, but I think that because this has gone on for so long, Libya has found ways that it can work around this very strange political environment.
That's a very interesting point you make about NOC as well as central bank transcending the political divide, and basically I think both sides recognizing that NOC needs to have some degree of autonomy to be able to develop projects because it is the main source of revenues. So it makes no sense, I suppose, to block NOC activities or prevent it from making investments. That's a very good point that you raise. I've got a question here about lack of electricity for some of these big projects, and is Libya doing anything to increase power production? Yes, it is actually. GCOL, which is the main state utility, has restarted the construction of three major power facilities. I forget the names of the ones. I think it's Benghazi, Tripoli East, and one other with Turkish and Korean contractors. And just last week, it announced another new oil gas-fired power plant with, I forget the names of the companies, but with a UAE firm, $1.6 billion. So that is also now going to be constructed. So they are making good strides in terms of increasing electricity output as well. Okay, question here about downstream refineries, gas processing plants, LNG facilities. Has there been any contracts or tendering in this regard, Will?
I think one of the interesting projects is, of course, this the Honeywell South Refinery project, 500 million, significant. I mean, $500 million project, which is quite significant. For a number of reasons. Obviously, Libya is a net importer of refined products. This really weighs on the economy. It's not an efficient way of doing it, especially when you're a country that has the biggest crude oil reserves in Africa. So it's good to see that that project has been signed end of last month, that Honeywell's participating, and that again could make a really big difference to the Libyan economy and just increase efficiency, as well as leading to connected projects and related projects, maybe in the downstream area.
Yeah. So I remember a few years ago there was a UAE investment. I think it was called Lepidco in one of the refineries in Libya, and unfortunately that deal didn't work out in the end. But I do believe NOC or Libya needs an international partner for some of these big downstream investments. There was also talk about LNG expansion and so on. But without that sort of big foreign investment, it's very difficult for these big investments to be made in downstream facilities. So I guess a lot of it is focused on upgrading and rehabilitating them. Question here on this 2 million barrels a day target. Clearly we see the development of fields like Erawan, Chadar, Atshan, and so on being part of that. But what other ways are they going to, how else are they going to achieve that 2 million barrel a day target? What else is known about that, Will?
Well, it's a tricky one because it not only relies on these upstream projects and to be executed well and things like that. I think when you talk to analysts, the thing that really makes them nervous is the idea that we could see more shutdowns of oil facilities by militia groups and things like that. That's definitely a risk factor. But I think if NOC does go through with all of the upgrades, debottlenecking and projects and things like that, and we do see engagement from the European community and international oil companies, really, amongst the pessimism, and especially because the Libyan workforce is so well trained. Those years of sanctions, Gaddafi's mentality, his obsession with sovereignty, it meant that he created a workforce which had significant expertise in the oil and gas sector, and that's something, we see Saudi plans to train up local workforces and things like that. But in Libya, they really had to do that before. And I think that's why it surpassed expectations after the civil war. And it is a plus factor right now when we weigh up the different pros and cons on our forecast. One of the pros is that this is a country that has a very well-educated, highly skilled workforce in terms of oil and gas.
Well, let's hope that they can achieve that. So I apologize, we've run out of time. I do realize there are a few other questions we haven't had a chance to answer, but you've got our emails here. So please feel free to contact us directly, and we'll do our best to answer any questions that we weren't able to answer today. We didn't have the time to answer them. Thank you very much, Will, for joining us today and answering the questions and for your insight. It's been very interesting. And thank you all for attending today. I hope you found it insightful and valuable. As I mentioned, this webinar is being recorded and will be on YouTube next week. We'll send you the link to it. You should already have in your emails the report, the webinar or presentation itself. And please, I would recommend and urge you all to look at our Libya Oil and Gas 2023 report to see what it covers and how it can be of value to you. So thank you very much for listening in today. I'll be back next month for our next webinar presentation, which will be on the MENA railways market. Very exciting. But for now, thank you for your attention. I hope you found it useful, and see you all again very soon. Thank you very much.